Hi everyone, hope you're all doing well, and today we're going to do a little bit of a stock update, and it has timed absolutely perfect because last week a lot of you guys asked me to do a bit of an update in this company, and I planned to do it this week. I left it a little bit later in the week and it tied absolutely perfect because they've just come out and raised their guidance, and that also gives me some little extra things to talk about as well, so it's all worked out absolutely amazing. So if you appreciate me coming to talk about a topic that a lot of you guys asked for, if you could hit the like button, that'd be absolutely amazing. And we'll get stuck into this company. So this company is called ELY, or Callaway Golf, and this stock is currently trading at $28. Now I believe the reason why a lot of you guys have asked me to come and talk about this company is because of this. Since I've been buying the company, which was at the start of this year, so it's still quite an early hold for me really, I started buying this company. And when I started buying this company, it was around about $24, and because of the run it had been up, it means I have had to average up on my position. And my position sits around about $7 at the moment, and you can see I was up a fair amount on this company, and then recently it's had a bit of a pullback, and at the moment I'm currently up something around about 5% at the moment, as you can see. Now, I think quite a few people have come and asked me about my opinion on this company because of this. You'll see that since around about June time, the stock has fallen around about 23%. So that is a really big pullback in the last couple of months. And if we're being honest, there's not much that's changed with the company. In fact, all that's happened with the company over the last few months is actually come out and reported earnings, and them earnings were absolutely fantastic. So I think a few people are a bit like, what's kind of going on with this company? Why is this company just lost, a quarter of their valuation over the last few months, when all that's changed with the company is it's just got better and better? And I think that's the kind of thing that's going on at the moment. Now what you'll see with this company is it's normally traded around the high teens, $20 a share, but you'll see recently it has gone a little bit higher, and it still looks very cheap at around about a 10p ratio. Now if you don't know what Callaway Golf is, they basically sell a lot of golf equipment. As well as selling a lot of golf equipment, they also have a couple of other brand lines that they sell, like in the clothing. But there was one acquisition that happened in 2020, which is the whole reason why I bought this company. Overall, the company itself for selling golf equipment is a very, very solid company. Don't know personally if it's one that I would have bought in, but because of the acquisition they made in 2020 is the whole reason why I bought this company. And the reason why I bought this company is because they bought this company, Topgolf, and they bought Topgolf for $2 billion. Now for me personally, I have been tracking Topgolf for a while. I think this company is fantastic. It is a driving range, but it is a little bit more of a social driving range, so you can go with your friends and you go onto one of these driving ranges here and you can just slog the ball as far as you want basically. But as well as that, you can have a bit of a chat, a bit of a laugh. A lot of these venues, they do a lot of events as well. They also have a bar area, a restaurant area, and it basically reminds me a lot of the US Hollywood Bowl. But as well as that, they are now starting to expand worldwide, and this is the one company that I wanted to get into because these guys have been growing at a very fast rate, and it is an amazing company. And what had also really attracted me into buying Callaway Golf, or because of the Topgolf merger, is this. In 2020 I was tracking this company for a long time because I thought Topgolf was going to IPO, and at the start of the year I thought it was going to happen in 2020. As you'll see here, Topgolf could IPO at a $4 billion valuation. At $4 billion I was like, oh, it's a little bit expensive, I don't know if I'll buy it. I'd prefer if it was a bit cheaper. And then what came out towards the back end of 2020, Callaway Golf had bought Topgolf, but not only did they buy Topgolf, they bought it for $2 billion, which was half of what the rumoured IPO was. So instantly alarm bells were going off for me, going, this is very tempting. An IPO that was supposed to happen at $4 billion just got bought for $2 billion. And as well as that, I'm not just going to be buying Topgolf, which is absolutely amazing. The thing is, I'm already buying a solid company. I'm buying Callaway Golf. Callaway Golf, one of the leading brands in the golf industry, with the clubs, with the balls, with the brands they own, like with Jack Wolfskin. I'm already buying a company that historically grows at a 2-3% revenue rate, decent amount of profit, and now you're adding the perfect business to it, which is Callaway Golf, Topgolf, and you have these amazing driving ranges now that all ties in. Absolutely amazing. So I was really happy to start picking up this company. Now going back to the share price, you'd think it's been a very bad couple of months for Callaway Golf, but that's far from it. The story for Callaway Golf has only just got stronger and stronger. What you might have seen, and I am hoping there's more of these that come in the UK, it looks like there will be, there is a lot of new constructions coming in for the Top Golf sites. We are getting one in Scotland as well. I'm hoping there's more that come to the UK, because at the moment a lot of them are down south. I'd really love to go to one on a regular basis, so I'm hoping there's more opened up in the UK. But as well as one being a new one coming up in Scotland as well, there is the first one ever coming in China as well. So hopefully China don't put as much as regulations on golf as what they do with a lot of their video game producers and streamers. You know what I'm on about there, if you guys are into your Huya stocks. But yeah, obviously one coming up in Topgolf, and it looks like there'll be a few more opening up as well. So that's another country they're entering into as well. These venues are popping up left, right and centre. And if we go on to their recent earnings, you can see here, absolutely smashed it on the earnings side of it. You can see here revenue increased 208% as well, so that is absolutely amazing. And you'll see here the golf equipment side of it is very good. Golf equipment and soft goods revenue increased 98%, which is great. 588 million. Obviously they had some easier numbers to beat because of the CV situation, but still golf is just getting very, very strong at the moment. Topgolf overperformed with 325 million. In my opinion, Topgolf is going to overperform month after month as more and more venues open. What the only stories you hear about these Topgolf venues is people are queuing out of the door to get into these venues, and I think that's going to be a massive growth side of the company. In my opinion, what you'll see in the next few years is Topgolf will outperform the golf equipment side of Callaway Golf. That's what I think you'll see in the next few years. And in the next few years, I see this Topgolf segment coming to a 1 billion contribution for Callaway Golf. So yeah, I think it's going to be huge. And also what that's going to do is it's going to put Callaway Golf into a company that actually grows revenue instead of 3 or 4% a year, to start being a 10% plus growth company, which you will start valuing Callaway Golf at a total different ball game to what it has been previously. And then obviously when you look at what has just come out as well, which ties in perfectly with this video, is Callaway Golf rallies after strong Topgolf traffic leads to guidance boost. So they've come out and also increased their guidance, which is absolutely amazing. And I think we'll see this more and more often. Now, if you go into Q3, what you'll see that their sales has been increased from 850 million to 860 million, compared to 775 million to 790 million. That's a huge amount of increase on Q3, massive amounts of increase. And the thing is, as well, is like, you consider this is going to get very close to where they're doing 1 billion a quarter. And where you look, and I think we could get to that next year basically, and you look at what their kind of expectations are for this year, 3 billion-ish to 3.1 billion-ish. You know, if we start talking 1 billion a quarter, which I think we could start hitting in maybe towards the back end of next year, you start thinking that's, you know, obviously 4 billion revenue. That's nearly a 30% jump in revenue from where we're at right now, and that's what I think that Topgolf acquisition gives to it. And I still don't think that Topgolf acquisition is being priced into the share price. So yeah, when we look back at the share price, you can see they're smashing out the park. Why is the pullback? No idea. You know, the news is just positive, and even after the guidance boost that we had, I mean, it popped up a little, but not really that much considering it. So overall, yeah, my opinion with Callaway Golf is I've always said that I expect this to be a $60 stock in the next 2 to 5 years, and it's one that I have a lot of confidence in because I can hardly see it going wrong. At the moment, it is an average position size for me, but you know, when I look at the risk to reward on Callaway Golf, I just don't see much risk. You know, the golf equipment's still going to be absolutely amazing and sell. The Topgolf, to build more and more venues, that's going to be amazing. Revenue growth's going to be good. They're amazing venues. There's hardly any risk here. So yeah, I think it's a very good company. And for me, like I say, in the next kind of 2 to 5 years, I easily see this being a $60 stock, and I see 100% upside. And that's why I'm very happy to hold this one. It also gives me a bit more. I think this is a good one for like the diversification of the portfolio as well. I don't have too many like leisure plays in here in the US stock market portfolio, which is great, and I think it's a good one for the stock market portfolio. And I guess that kind of leads me to like the final question, which I guess I get asked quite a bit, is like, what's my plan on this 25% dip at the moment? Now, I have thought about this a lot at the moment. I have thought about averaging up, buying a bit more shares, building it into a big position. At the moment, I'm kind of fully built for an average position. Could I make it a top 3 position? Yes. The only little thing that I'm kind of considering with building this into a top 3 position is that I don't really want to kind of average up here. If I'm going to build this into a top 3 position, I've got to see a little bit more upside. For me to see a little bit more upside, the stock has to go down to the $20 to $25 range. So with the ones that I've been asked quite a bit recently is that now it's on this dip, will I consider buying? Will I buy some shares? I have thought about it a lot of times, but at the moment I just don't see myself averaging up to make it a top 3 position. For me to make it a top 3 position, I would like it to go below my average of $20 to $25, and then you would see me buying. At the moment, for me to average up when it's already an average position, I just, don't want to do that. And also the other kind of aspect here is that what happens if it keeps going down and I start averaging up? I then leave myself a limited space to kind of average down on that one. So I will play the waiting game and the patient game with this one. If it doesn't go down to where I want it to, fair enough, I've still got a very good position built to hold for the long term. If it does work out in my favour and it does go to that $20 to $25 range, I can bring my average down, make more money, and then it can be a top 3 position. And that's where I stand with Callaway Golf. Apart from that, everything with the company, absolutely fantastic. I couldn't ask for any more from this company. It's one of those you just got to look at the share price and realise the share price isn't currently reflecting what's going on with the company. What's going on with the company is absolutely amazing, and I'm still very happy to hold. So hopefully that little overall overview of Callaway Golf was useful for a lot of you guys that asked for a little bit of an update in that one. If it was useful, hit that like button, and if you're new and this is your first time watching the channel, maybe subscribe if the video was helpful. And as always, I will see you on the next video.